Hey there, everybody. Happy Monday to you. Uh, just hiking my noon hour here. So, got got 9 pounds lost. I got about another 25 to go. So, hike my noon hour instead of eating my noon hour might help a little. So, anyway, I want to talk markets a little bit real quick. Especially wheat. Corn and soybeans are still looking for that low. So is canola. I had hopes for canola last week. On Friday we made that big reversal higher, and I thought, okay, maybe that's it. Maybe canola's ready to bounce here, and, and then today the funds just massacred it. So I guess it's not cheap enough. I don't know what it takes. But the one thing I'm really watching this week is the wheat market. And what's going on there is we made. The market doesn't want to stay down. The funds come at it with 6,000 contracts a day, selling right now. And usually that's a 20-cent down day. They tried to kick it down 20 on Friday, and we closed down, what did we close on, 8 or 9, 10, something like that. And then today, they had us down 13, 14, and we closed down 5. I mean, it's still negative, but it's hanging in there. And when I look at the chart, it's got that nice big round saucer look to it. It's one of my favorite formations in wheat or grain, for that matter. And if we got to move out of here, though, we've got to get some legs and get up away from this thing and get headed up to those highs around 640 in Chicago. If we can do that, then I'm very confident that the tide has turned and we're going to have some better days. What bothers me, though, is that I don't know how much more these funds want to go. They have a record short in all contracts combined. So when you combine, the 3 wheats, corn, soybeans, you combine all those together, it's by far a record short, especially for this time of year. So they're just convinced that the stuff is worthless, and I don't know what the other side of their hedge is, whether it's, a NASDAQ or a stock position. You've got record, how do I say it? You've got a record gap between equities and commodities right now. So if you look at a chart, I'll see if I can dig one up and post it in my newsletter this week, or post it in an email this week. But when you get those records like that, they typically don't last long, and it ends up going the other way pretty quickly. So, but I don't know how much they could do this for 3 more months or 4 more months. I mean, or I don't know what's going to kick them out of that habit. Anyway, so if wheat doesn't perform here, if we fail, if we go back down to the low, I'm looking at that. To make that saucer look good in Chicago, we need to get out away from that 580 area, somewhere in there. That's got to hold. The secondary low that we made, a few weeks back, it's below that yet, but to give the right look of the chart and the right price action, we don't want to do that. So, I don't know where we closed today. I can't remember, the 595 or 96, something like that. So we don't want to go back down there, right? 580 has to hold. We should see that in the next 2 weeks. Or no, I'm sorry, 2 days. We should see if this thing's going to go or not, by Thursday. So, anyway, as far as my positioning, I'm going to make decisions based on that. And, if it bounces here and starts rolling, the cash price will follow. We'll get some better numbers. If things fail here, I'm not going to sit on it till May, June, even though I think life might be a little better by then. I'm not going to sit on it that long. I'm just going to let it go, quit paying interest, quit paying storage, and, we can buy it back if it closes over, a channel line or $6, whatever base we got to build again. I'm hoping we don't have to do that. It looks good today. Um, you know, it just needs some good news and something to propel us out of here. So it's a very difficult time. I think everybody's starting to see it now. I mean, these markets or these hedge funds are just absolutely crazy on what they're wanting to do. I mean, they're just absolutely fearless and going to make sure we push everything down to zero. So this isn't supply and demand driven. This isn't, balance sheet driven. This isn't any of that. This is strictly just money flow, and like I say, they're getting traction with it, so they're going to stick with it until they don't. And the one market where they are not getting the traction they used to is wheat. So that's what we're going to watch. And that's what we're going to make our decision on. So that's what I got going. Other than that, I'm just waiting for corn, soybeans, and canola to make their low. Once we get that low in place, then we can have something to trade off of. South American weather still looks iffy to me. We're not getting any traction out of that either. But at some point we're going to have to. For comparison purposes, soybeans moved in 2015. 16, they had a similar weather pattern. It wasn't quite as brutal as this one. It wasn't nearly as hot, but similar in dryness. It just didn't have the heat aspect in Brazil. And the market moved in February. It did not move in December or January, even though that's when the damage was done. It waited till February and mid-February and moved. And so I'm kind of pumping the brakes a little bit on my soybean position. Just waiting to see if we do a similar thing then. Again, it's hedge fund driven, so we're kind of stuck with their game, whatever that is. So anyway, at least we got a water cycle down here at the creek. Creek looks pretty good. Been a long time since we've had flow levels. It came down a lot. You can see the water level was clear up here, a couple feet higher than it was than it is now. But we got 3.3 inches in this snowpack in the month of January alone, and it's all soaking in. So it's nice to see that. It's been so dry for so long. It's just makes you think it was never going to switch back. But anyway, that's all I got for now. So holler if you see something or need something, and I'll be bugging you as well and kick an email out later in the week. Thanks.